So Target invests in Europe, Middle East, Africa. So Israel is a big part of our investment thesis. We do early stage, mid stage investments around technology broadly defined, so software, mobility, logistics, healthcare, consumer, and fintech. We've been doing it for the past decade, headquartered in London. So that's our main focus.
Where do you see opportunities right now in terms of the investment landscape?
So I think, like everybody, we're very focused on AI. I think it's an unbelievable revolution that we're seeing right now, generative AI, but very different than other things that we've seen, than cloud, than the internet before. I think it's less clear how it's going to play out in the venture world. It's very easy to overestimate the short-term innovation and underestimate long-term impact of things like AI. And I think that we as a firm are trying to figure out where can we fit in, both with our existing portfolio, so helping people put AI into what they do and get efficiencies. And we've had companies such as TravelPerk, which is a travel management company, change its entire DNA through leveraging generative AI, but also how do we invest directly into the ecosystem, and that's I think a bit harder.
Mm-hmm. I want to talk more about the opportunities that you see in Israel. You mentioned that there is a focus there in terms of your investments. What is the innovation that you are focused on?
So Israel's obviously gone through a tremendously difficult time, right? We've gone through a war of over a year now in several fronts. Before that, we went through some internal problems, political problems with the protests, and after 2 years, I think it's actually pretty clear that Israel has sustained competitive advantage in the world of technology. We're seeing sectors like cyber, we're seeing places like gaming, we're seeing sectors like, and we're seeing it, by the way, around AI, companies like NVIDIA and Microsoft and Google and Facebook and a bunch of startups and people like Ilyas Askachever making Israel a big part of their push towards generative AI. So we're seeing that Israel has sustained competitive advantage. And that's amazing to see, particularly in a time like this. And I think that's going to continue, because I think it is a virtuous cycle. And in Israel, we're very focused on going to second, third-time founders and helping them find even bigger plays to go for. So I think we want to be part of building this next generation of Israeli companies. We're not $10 billion companies like the last generation, like a Monday or a Wix, but to find the first $100 billion Israeli company.
So it's interesting, Shmuel, what I hear you saying here is that founders with experience who have done the building process before certainly are founders that seem attractive to you in terms of ones that you might want to partner with. Is that the case?
For sure. I think the best example is Wiz and Asaf Rappaport, who's an experienced founder, unfortunately not in our portfolio, but an experienced founder who went and for his second time went to build something big from the start. And he's building something tremendous, right? A category, what could be a category-defining company. And I think we're seeing more and more of those in Israel as the ecosystem matures, and that's something that we used to see only here. And we're also seeing management teams that can carry companies longer. They're not selling out, they're not going public early, they're building real businesses, and they want to build generational companies. And that's actually new from the last few years in Israel, and I think it's going to continue.
Even though, we are obviously watching the war happening in the Middle East, as you referenced earlier, and we've seen the impact on oil prices when it comes to a market's perspective. The stock market behind us here is still right near records, at least the S&P 500. How do these market conditions impact your decision and advice to these companies on when to actually tap the capital markets?
So I think it's very hard to time the market. Probably impossible to time the market. I think one of our main learnings from 2020, 2021 is that you have to be ready for the market and not try to time. So we're telling companies who are mature to start behaving like public companies without going public, try to put the process in place and to find the right moment to go public when the market is ready. I think potentially the market is not ready yet for those $5-10 billion valuations to come in at scale. And that's fine. The market's very focused right now on big tech. But that will trickle down. And I think when it will, companies who are ready and are already working the right way, have the right internal structure, have the right processes, they'll benefit just greatly from reopening market.
And with the Fed now on a path to cut rates, central bank here in America, do you think that will speed up the timeline. What do you see as the timeline for some of these companies tapping the capital markets?
So I'm a VC, I'm a very poor macroeconomist. I'm not sure I even understand how it works. I think it definitely helps the mood. And we're in an industry that's very dependent on mood, right? We're in a dream industry, so it highly depends on mood. I don't think it really matters if the rate is 5 or 4.5 or 3.75. I think that idea of the economy's improving, rates are going down, it's going to become easier to fundraise, that impacts the market by itself. I don't think we should probably go to zero rates again. I don't think it did good to our industry, actually, despite everything. It overinflated it dramatically, and I hope we don't go back there anytime soon.
Well, I mentioned at the start of our segment here, innovation is so key, crucial to what we do here at the stock exchange, crucial obviously to what you do in your business and companies really around the world, and consumers looking at AI and how to make their lives and workflow more productive. And the conversations that you're having with the more than 100 companies that Target Global invests in, how much of that conversation is getting these companies to use and enhance AI?
So I try to open every board meeting, particularly with software companies, with asking people how AI is going to destroy your business. And I think that's something that every CEO has to think about. We have to always remember that the actual implementation lags the atmosphere. So if you look at what companies have actually been doing, very few, even larger public companies, have actually been able to leverage generative AI to do anything meaningful. But we're seeing more and more every month, every quarter, more and more companies. And we're seeing companies, and I mentioned before TravelPerk, which I think is an amazing test case, companies who've taken a business and transform it through generative AI. I also think you have to be careful, because also it's easy to underestimate how expensive it's going to be to work with large language models at scale. And I think we're talking about interest rates. In this type of environment, even companies like Microsoft can't subsidize their customers forever. And they're going to want to recoup the hundreds of billions of dollars of infrastructure and computing costs and energy costs that they've incurred over this. And that's going to have to roll to companies, including to our portfolio companies, as we're constantly trying to help people think about efficient ways to use AI. And what's the right architecture so you don't become dependent, and when prices do go up, which they eventually will, you don't get stuck. And I think a lot of companies will hit a brick wall when that finally happens.